Hey everyone, my name is Peter. I run the insights team at Carta, and I'm going to spend the next 15 minutes telling you exactly what we're seeing for how AI startups are fundraising, the valuations they're receiving in the market, how much ownership founders are selling, everything you want to know when you go out and talk to VCs. Show of hands, who's an AI founder in the room? Okay, great. The rest of you, this might not be as helpful. From our lawyers. Yes, you can have this deck if you find it interesting. Shoot me an email, peter.walker@carta.com. So why should you care about anything Carta has to say about this industry? Well, my practice is to aggregate and anonymize the data from the more than 50,000 cap tables that are currently active on the Carta platform. If you look across our numbers versus Crunchbase, you can see that about 80 to 85% of all the unicorns in the US use Carta to manage their cap table. So we know quite a lot about what's going on with startup valuations and fundraising. Two sides to this story. So just to put in context the sort of frenzy that is happening right around AI today, we have to kind of go back a couple years and talk about VC since 2018. So this is just a chart that shows how much money was fundraised by Carta clients every quarter since the start of 2018. And I think it's pretty clear that one of these years was an aberration, right? But that isn't happening now. That happened in 2021. Everyone went bonkers. We fundraised a ton of capital. We will not hit that 2021 number for a long, long time. And we're kind of dealing with the after effects of this change all the way through the end of 2024, and we're going to continue to deal with it in 2025. So what does that mean? It means that no matter what part of the startup market you look at, from seed to Series D or even pre-IPO, fundraising is down if you just look at total capital. And if you're a founder in the room, the most immediate impact that has for you is if you are planning to fundraise every 18 months to 2 years, which was the old advice that you got from VCs, you are planning to fail. It is going to take longer than that in the vast majority of cases, even we just noticed for AI startups. So if you have 18 months of cash left in the bank, it's time to think about how you're going to extend that or what changes you're going to make to your business in between. And those gaps, those extended fundraising timelines, mean that companies in the private market are staying private much longer than they used to. You know, Facebook IPO'd, I believe, after 8 years, and private maybe 9. I think the median right now is 12 or even 13 years that you would remain private before you hit the public markets. So that is a long, long time to be dealing with venture capitalists. So what are these VCs doing if they're not investing into new businesses? Well, it turns out they've spent a lot of time over the past 2 years dealing with the companies they've already invested into. Bridge rounds, extensions, convertible notes, trying to do everything they can to keep those companies afloat. Now you can see in 2024, especially in B and C, some of those percentages of bridge rounds went down. We kind of need those to go back down even further to be back, quote unquote, to a healthy level. But this is where a lot of the VCs that we talk to are spending much more of their time than they would like. And of course, if you can't raise a bridge round, you might end up raising a down round. 20% effectively of all the rounds on Carta last year were down rounds. It's the highest we've ever seen in our history. So if you're a founder right now and you've already raised some VC capital, you should know that the stigma around down rounds should be kind of erased, right? A lot of your friends have done it, even if they haven't told you about it. And it's something that you should do if you have to keep your business afloat. Much better to take a down round than to have to shut the company down. But unfortunately, there's a lot of that happening too. So if you take it as a granted that we overfunded in 2021, what does that mean 2 to 3 years later? We're going to have a lot of companies who took on too much cash who cannot keep going. We've been reading about these headlines in TechCrunch and other places. It's true. More companies are shutting down today than ever have before. But as a percentage of total companies, it's basically flat. We just funded a lot more companies in 21. Okay, that was depressing, right? That was not my intent, but I thought it was useful to start with some reality. But that's not the story when it comes to AI funding. So first and foremost, if you just look at 2024, this is across all companies, not just AI, we saw more funding in 24 than we did in 23. I think that number is going to end up around 85, 86 billion when it's all said and done. Better, not 2021, but better. And 2025 should be better still. And a lot of that is happening because of AI investment. So It's a major factor no matter what part of the market you're looking at. Interestingly, I think most of us believe that AI is going to start at the earliest part of the market and then work its way up. I think AI is a little bit different because it's actually, given the way that these late stage companies have adopted the technology, impacting every stage across venture, basically simultaneously. So even very late stage rounds, again, the ones that you read about with Anthropic and others, those Series E, Series F rounds, those are actually dominated by AI. The percentage of capital by stage that invested into AI versus non-AI companies, almost half, 50% of every dollar that we're seeing on Carta is going to an AI company in Series D and Series E. So it is the dominant theme of investing, and that dominance is only ensconced even more concretely when you look at Silicon Valley in particular. Okay, so for the founders in the room, what does this look like when you are actually fundraising from VCs? Top lines there, the non-dotted ones, the solid ones, that's the pre-money valuation of companies that are raising a seed round. The dotted cash is just the number of dollars that they raise in those seeds. So if you're an AI company, in 2024, the median pre-money valuation was about 18 million bucks, and you raised about $4 million in your seed round. I'm talking about a 22 million post-money valuation for seed stage companies in AI. That is incredibly high, historically speaking. That is very, very, very robust. Will some of that money be wasted? Absolutely. But this is venture, so we're kind of okay with wasting money sometimes. You can see the difference there between AI and non-AI. While it's true that you can still fundraise if you're not an AI company, you're just not going to command the same valuation, attention, or competition that you would if you were an AI company. I'm not saying that you need to pivot, but you should have a story as to why it's not in your pitch deck if it isn't. Same pattern really holds for Series A. So if you're going out and raising a Series A today, you're looking at about a $52 million pre-money valuation on 12 million raised. So again, you add those up, you're talking about $63, $64 million for a Series A company in AI today. Who thinks that feels expensive? Of course not, right? But it is. It's actually crazy expensive when you look at it historically speaking. And yes, you have to take a little bit off the top of these numbers because they're not adjusted for inflation. But even so, we're approaching 2021 levels in AI valuations right now, and we're probably going to peak over them in the beginning of 2025. Series B, the story continues. You're still raising at about a 50% premium if you are an AI company versus a non-AI company. I should have mentioned this is all digital startups, software startups. I just removed hardware and biotech because they can kind of confuse the numbers a little bit. And then the cash raised in round, still about $25 million raised in a cash round for AI companies. And so you're raising more money at higher valuations, but are you keeping more of that equity for yourself? Good question. Turns out that if you compare how much AI companies sell to investors across each of these stages, generally speaking, the AI founder is getting a little bit of a better deal, right? It's still the common wisdom that you're going to sell about 20% of the business in your seed round and another 20% in your A round. But that's a little bit lower, 19% if you're AI. And then across the stages, generally speaking, the AI companies have it a little bit better when it comes to negotiating with those VCs, especially at the upper end. So if you're raising at the 75th percentile of your range, that probably means that you do not have a lot of competition for your deal. You're working with one investor and one investor only, and they're driving a really hard bargain. That seems to be less common when it comes to AI startups than with everybody else. But of course, it's not just SaaS, right? We have AI across every single one of these verticals. The black bar is the number of deals that went to AI. The orange bar is the percentage of cash that went to AI. So you can see that AI has quickly made its way, much more quickly than other emerging technologies, into every part of the startup stack, no matter if you're a Web3/AI company, a hardware AI company, et cetera, down the list. But that brings up an interesting conundrum when we talk about AI as an investable category. It really probably should be broken out into many different kinds of AI. You know, the difference between building an application layer company and a foundational model company are pretty gigantic. And you can see in some ways that's being reflected by the way investors are treating these companies when they fundraise. Physical AI, so AI startups that are building physical products, or hardware technology are, generally speaking, more highly valued and raise more money, but there's far fewer of them that are approaching it that way. The typical Gen AI software startups are still the dominant form of AI when it comes to the fundraising market. And just as a feel-good slide to close on for all of us here, the orange line there is the Bay Area. So if you just take all the AI rounds on Carta and say, where are those companies located by stage? About half in the early stage are in the Bay, and way more than half in the late stage. So if AI is the next fundamental wave of technology, then that wave certainly starts here in the Bay Area. All right, so wrapping up, AI companies, everything that you've heard about them is true. They're raising bigger rounds at faster paces for higher valuations across basically every stage of VC. AI founders are being able to maintain more ownership at the same rate as non-AI founders despite raising more money. But investors are starting to get a lot more discerning about AI within specific sectors. So if you went out with a pitch deck in early 2023 and you just had the magic words AI in your deck, hey, you might get a meeting. Hey, you might even get funded. That's not the case today, right? Investors are being much more discerning about what they consider AI with a sustainable moat or defensible advantage in a way that I think is really healthy for the ecosystem. And if we're in a bubble, that bubble, I think, is getting a little bit smarter over time. Tiny pitch here. If you haven't been on Carta, if you're not on Carta right now, starts 100% for free. So if you have not raised any money from VCs yet, you start on launch. That's that left-hand QR code. But if you are on Carta, this is something new from us, and you are about to raise a Series A or Series B, any priced round, scan that QR code on the right and come and talk to us about this new product we have. We think that priced round funding is way too expensive. We think that the fact that it might cost you $50,000 to $60,000 to $70,000 to raise a price round is absolutely silly. And we're building tech for everyone on Carta to do that much, much more quickly, and that tech is free. So if you're already on Carta and you're raising a price round, let us save you conservatively $3,000 to $6,000 as you do so. I have 2 minutes for questions if anyone has anything that conversation sparked. I'm not sure this was supposed to be a Q&A, so I apologize if I'm springing that on you. Questions? Yeah. That is a wonderful question. Yes, Carta is 100% available for startups around the world as well. We have startups in Singapore, London, Canada, LATAM, anywhere that you think. Yes, definitely. Love Hong Kong. Yeah.
Thank you for the presentation. Super helpful. From your perspective, we kind of know there's a hunch even among the VCs. They're raising less money and stuff.
Yep.
Your presentation has been directed towards us, found super helpful. What would be the 2 or 3 bullet points if you were talking to the VCs about how they're doing it?
That might be a slightly even more depressing conversation. Apologies to the VCs in the room. Look, there was that great chart from PitchBook recently that said something like, 70 to 80% of the cash raised this year by VCs have gone to 9 firms. And we all can list off those 9 firms, right? Andreessen, et cetera. I think the willingness of LPs to back emerging managers is a huge factor to how much of this ecosystem continues to generate these kinds of funding levels. I think it's going to be really hard. There were a lot of people that raised their first funds in 2020, 2021, and early 22, and having a really outlier fund in that environment is incredibly difficult given the way that funding was kind of overvalued in those years. So I do think, unfortunately, we're going to see a lot of VC funds on Fund 1 or Fund 2 not raise Fund 3 and go back to doing something other than VC. When VCs talk about startups, they often say, well, that's healthy, we got over rots. When they talk about themselves, they say, well, we need some more money. It's kind of difficult. But I do think that's going to be a really challenging period for smaller emerging managers over the next couple of years. Yeah.
So you spoke about Carta's support when it comes to cap tables, etc. What are the... Thank you. So Aruna Dantaphaktuni, regkey.ai. So my question is more for other than cap table, what are the other services that are available on Carta that founders can look into?
So many, but I can mention a couple of them. So one, if you're on our launch program, you can send, wire, and fund safes completely for free. If you are also looking to hire people, so if you're on Carta and you're growing from, say, your seed to your Series A round, you know you're going to make 10 hires. We have what I think is the single best intelligence database on what to pay startup employees in the world. So salary and equity and bonus all across. If you're hiring a level 5 engineer in San Francisco or a new marketer in Bangalore, we have, I think, the best data in the world to tell you exactly what to pay that person, what the range is. So a lot of different ways. We can help you with 409A, we can help you with QSBS. There's a whole lot of features.
How about legal support?
Legal support? We are not lawyers, but we can introduce you to some good ones.
Thank you.
Yep. I got one time for one last question. Yeah. Hi, Neve.
Portfolio company of ours. Oh, thank you very much. Obviously, you've talked about the benefits of Carta to AI startups, but I'd love to get a sense from you. What do you see the future of insights at Carta leveraging AI and ML technologies?
Yeah, it's actually a program that we've been thinking about a lot. You know, in an ideal world, I would scrape this data, aggregate, anonymize, and then allow you to query it with ChatGPT or something else. When we've tried to do that, it's gotten the answer wrong just enough for me to be annoyed by it and wouldn't want to lead you astray. And also we have customer privacy concerns to consider. I do think that you'll see, you know, sneak peek to something that's coming out later this year. We're going to launch a new website called carta.com/data. And that will have interactive versions of a lot of the data that we have so that you as a founder or an investor can go play around with it yourself. So you feel armed when you're going into that meeting with a VC or with an LP about exactly what's going on in the market. So I promise that wasn't a pitch question that I planted in the audience, but that was, I love it.
No, thank you very much and great to meet you.
Cheers. Yeah. Thank you, everyone. Really appreciate the time.